Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 9, 2015. This is the daily chart of the SPY. Here are the blue trend lines. Let's talk about what we've got. So, we did see a top come in, in the neighborhood of Friday into this morning. And basically what happened was we hit this top here the other day on the 6th. And then this morning, the market, the Globex session on the S&P E-mini opened up down last night. And then the market sold off today, rallied back up, and then sold off towards the end of the day and then tried to rally again. So where did we go? We came into this blue trend line. Isn't that ironic how this trend line, and it's not, we didn't draw this in, the market drew this trend line in, right? So if the market drew the trend line, it thinks these levels are important. And last night's video, I told you that if we were to come down this morning or come down today, okay, we would probably come down and test this area here. And I told you it was going to be about 204. Okay, what's the low today? 204.13. All right, that was where the trend line was. So what's important is we can ride this trend line down a little bit, and if we do, that becomes actually more of a bullish pattern than a bearish pattern, because if we consolidate above this trend line here, we can build up enough steam to go forward. However, if we break below the trend line and close below this trend line, then the probabilities increase that we're going to go to the bottom of this channel, down to this bottom trend line. And then if we do that, the probabilities increase further that we're going to come down in this area, because we've already beat on this trend line enough times where I don't know how many more times it's going to hold, especially since we got out above the channel this time. So market symmetry would say if we got down to the bottom, then we would probably get out of the channel again on this side. So we'll see what happens. But one thing that's weak for the market is that the fact is today we closed, we closed today at 204.13, okay? No, that's the low. We closed at 204.94, and the low is 204.92 from the other day. So, well, we didn't close below the low from the other day. It was pretty darn close. That would be a bearish signal. I actually thought we did, but apparently we didn't. Let's just double check that. 204.92 is the low from Friday, and the close today is 94, 204.94. Okay, so we closed inside of Friday's low, which isn't as bearish as it would be if we closed below that. But again, that's not as important as this blue trend line. This blue trend line is everything right now. If we get inside this channel, watch out, we could come down to the bottom. We'll have to see how it plays out. So tomorrow, this is a very, very important level, and that will be on watch. So what do we have in terms of cycles and that kind of stuff? Well, since we really just hit a daily cycle top here, okay, we could, should, and most likely will see another few days of at maximum sideways action, but we should see some downward pressure in the market. And what does that tell you? That tells you we may bust into this trend line. We'll have to see how it plays out. But don't forget, we're still inside of this weekly bottom here. Okay, that's still going on. This weekly bottom is still in force, and once we get to a weekly top, that's a different scenario. But right now, we don't have a weekly top in place. This was just a daily top. So weekly top should be higher. So there should be higher prices ahead, but all bets are off if we break the bottom of this trend line. That's for sure. Okay. I think that's about it on the market. So let's go over to, I'm looking at my notes here. Let's go over to crude oil, because we have a scenario on crude oil. Okay, this is the USO. All right, it had another positive day today. And here's the thing. So this in here on the 3rd was a daily cycle top in crude oil. But we've sold off quickly, but then we rallied back up. Now, we haven't closed above this level here in the USO, which is 2029. Okay, but if we close above 2029, that means that the daily cycle, the market just went through the daily cycle top, and that happens probably 20% of the time. That could happen, and that's okay if it does, because we're in the midst of a weekly cycle also. We're always in a daily, a weekly, a monthly, a yearly cycle. We're always in some kind of a cycle. But what's important is the ones that I can see coming that should give us a turn date in the near term. And those are the ones I tell you about. I'm not telling you about a cycle that may top or bottom in May. I don't care about that right now. I want cycles that are going to top out or bottom in, the next week or so. Those are the ones that we want to know about because those are the ones we can profit from. So there's a weekly cycle top that's also due this week in oil. So what does that mean? Well, a lot of times the market will rally up into a weekly cycle top that's stronger than a daily cycle force. So if a market's going to rally up into a weekly cycle top, we may see the market rally further up, into or throughout this week through this 50-period moving average into this area here maybe at 21, 25, let's say 21 and a quarter to 21.50 in the USO. That would be about another $2, $3, $4 in the price of crude oil if that happened. And that would take us to maybe $55, $56 in the price of crude oil. And if we got up into that area this week, let's say Wednesday, Thursday type of thing, and this is a hypothetical now, but if that played out, if that scenario played out, then I would have to say, and I'll tell you more as we get there if it starts to play out that way, but I would say that becomes a shorting opportunity for oil if that plays out that way. So we're going to have to see, because right now you have a daily cycle top that's not playing out and a weekly cycle top that's due this week. So any way you look at it, after this week, we should see lower prices in the price of crude oil. All right, that's enough on crude oil. I'll keep you updated on a daily basis as we move forward. Right now, there's really nothing to do until we see one direction play out or another. Let the market tell us what to do. All right, let's go over to gold real quick. And this is the GLD. Had a little bit of an update today. The GLD put in an update about 53 cents, the price of gold. It was up anywhere from $4 to $6 today during the day, and that's fine. We're in the area here where I'm comfortable owning some gold. I do think that there could be some more downside pressure, specifically down to this 50-period moving average. Maybe it pierced below it slightly, down at the 117 area in GLD, 116 and a half. I don't see much more than that on the downside. I'm okay with that. I'm willing to sit through some of that. I'm back in gold on a longer-term basis. And the reason is it's not a trade. It's not a trade alert. It's something that I hold for, longer term periods at a time, most likely. If there is a trade, there's a trade. But I'm saying, and I have been saying, that 2015 should be a more bullish year for gold. So I tend to collect gold down in this area. Remember, I was collecting it down here. I was collecting it down here. I'm starting to collect it again because I think there's another up move coming. I think we're going to see 1350, 1375 on the next move higher in the price of gold futures, which puts the price of GLD up in this neighborhood here. I want to be there for that. So I start collecting it. It's not a trade alert that has a specific target on it. I'm just giving you the bigger picture in gold, and that's what I see happening. So I'm just giving you what I see developing in the gold market. I think we're going to keep it short tonight, folks. That's about all I have. Hopefully it's helpful. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.